Hello investors, it's March 16th, 2016. I'm Grant, this is Gary. Adam Carlini is our third partner and we are Dynamic Wealth Management. We're excited, March Madness is starting. We've sent out a few emails that have an invite to the Dynamic Wealth Management March Madness pool. Feel free to join, feel welcome to invite any of your friends to join. It's $100 to the winner, $50 to second place, and $25 to third place. It's free to join. So we're just hoping to have some fun this March Madness season. The market's been on a little bit of a tear. It's moved up into the green zone, and so we're definitely going to talk about how we're treating that in this video.
That's correct. Now, one of the things Grant did not mention is that I have won the office pool for March Madness 2 years in a row. So I'm going for a three-peat.
Should I grab the trophy?
Yeah, you can show the trophy, the much coveted trophy. Whoever wins that in the office keeps that trophy for the next year.
So it's coming to my office now.
So we got bragging rights. So we'll love to give you an update on the market as well as what's going on throughout March with the NCAA tournament. A lot to talk about, or actually we'll give you a quick update with what happened with the Federal Reserve, their announcement today. But without further ado, let's go ahead and jump into the market. All right, investors, good to be with you on this March 16th in the afternoon. Let's give you some quick update on some upcoming events we have. Again, we continue to do what we call Investments for Breakfast. That is a Tuesday meeting here in the office in our conference room. We just had one this past Tuesday. That is for clients and non-clients. Very easy going, where we give a much more detailed update of the market, the economy, and some danishes, coffee, juice. We'd love to have you come out. The next one is March 29th, and then 2 weeks later, April 12th. Again on that Tuesday, we'd love to see you. As far as formal seminars, the next one we have is March 24th, and that is in Sun City Grand. Please give us a call so we can reserve your spot for yourself and a friend. Give us a call at this number here. Let's go ahead and talk about then where we are. We are now pushing, as far as our main price indicator, back to our green zone. A little bit surprising, but as Grant mentioned in our intro, we have had 4 or 5 pretty good weeks in the marketplace that have pushed us through the yellow zone back into the green zone. And Grant will talk about our plan for taking positions, more equity positions, in the week and weeks to come. As far as key things that have happened, let's give you just a couple things in this quick video. The first is an announcement that came out from the European Central Bank. You'll recognize this face. The face, it was superimposed by MarketWatch on their article that recently came out this last Thursday. Notice they picture him with a bazooka. And the reason why is basically they're trying to say that Mario Draghi, who is the central bank president, came out and pulled out all the stops. One of the things they did is they went further into negative rates from 0.3 to 0.4%. They also pushed their refinance rate from 0.05 down to 0. Which should help as far as that's similar to our prime rate, is that's their key lending rate in Europe. And the final thing is they improved and actually continue to buy up longer term bonds. In fact, they went into investment grade bonds, not just treasury bonds, and they added another $20 billion on their bond buying program. The idea again there is to create demand for longer-term bonds, which would decrease longer-term rates, which hopefully would spur on the economy and spur investment as interest rates would remain low. So basically, they're pulling out all the stops and they're trying to fight deflation in the Europe zone. The announcement that came out this afternoon that we were kind of waiting for is basically, you'll notice Janet Yellen very happy in this picture. The Fed chose to leave short-term rates basically at bay and only raise 2 more times in 2016. You'll remember back in December they said they were going to raise 4 times at a quarter each, totaling about 1%. They've now decided to say, no, we're only going to do half of that increase. And the reason why is they specifically cited global and economic or financial risks that are prevalent right now. So that means basically more stimulus for the markets on both of those announcements. Even though the underlying concerns are there, price action has improved, and we would expect the markets would continue to love the stimulus, but we want to wait and see, and we're going to be taking a little bit of a cautious approach. So I'll allow Grant to give us more information on what we're seeing as far as what's going on in the marketplace.
Okay, Gary did a great job giving us a picture of where the economy is. Well, let's talk about the stock market and a couple of things that are pushing that. We get the question quite a bit, what is driving the market? And one of the answers to that question is oil. It seems that as oil does well, we oftentimes see the stock market pick up as well. So you see 5 weeks we've had a pretty strong run in oil. Actually, it's moved from about 26 all the way back up to $38 per barrel. So percentage-wise, that's a very large move. I know it's been at 100 recently, but looking from where it's been, this has been a very strong move, and you'll notice that the market has had a pretty strong move right along with oil. So you remember, here's some key levels that we're watching. This is the S&P 500 that we're looking at. So here was the bottom key level we were watching, where it touched it, and it came down and touched it, and it came down and touched it, broke through a little, but still held the general area. And then we were watching this top line, and now we have broken this top line. That was one of the things we were watching carefully. As Gary pointed out, we are in the green zone now, but we have been hesitant to take our full position because we wanted to see what was going to happen here. And you'll see, look, it touched it, and it did come back down, and then broke back through with authority, and now is touching up against another resistance line here. So again, we want to see a little bit of follow through here, but we are going to be taking our equity positions and get everyone to a full equity position. We just want to do that strategically and not do it all at once when there's a strong chance that the market could turn back on us as soon as we take those positions. So we will be strategically taking those positions and getting everyone to a green allocation, but we want to do that with the most tact as we possibly can. So with that being said, let's remind everybody what a green allocation looks like. Well, before we jump to that, so again, we are in the green zone. We don't have a lot of space there, considering how high we've been in the past above this yellow line. We're just above it, and so again, in the green zone, but not really with follow through or authority yet. But we need to respect price. And with Janet Yellen and the Fed's recent announcement that they are only going to raise rates 2 times this year instead of 4 times, the market has seemed to like that. It rallied off of that news, so maybe that'll be enough to give us the follow through that we need. But again, so the green zone, what does that look like? Well, if you are a growth client, then we'll be 100% in equity positions and none in defensive. If you're a moderate client, you'll be 80% in equity positions and 20% defensive, and conservative, you'll be a 60-40, 60% risky assets and 40% defensive. So this is the zone that we're in. This is not the current holdings of our clients now. We are going to be increasing the equity positions to get here, but we want to do it as efficiently and as tactfully as we can. So we're going to be taking strategic opportunities to get our client to the right allocation, but this is the goal. As long as we stay in the green zone, this is where we want to be. We just want to get there the best way we can. So again, a quick reminder about our March Madness bracket. Please join that. Invite your friends to join. For our disclosures, we just need to remind you that we are not making any specific recommendations here. Past performance is not a guarantee of future performance. Again, if you have any specific questions, please contact us. We'd love to help you in any way that we can, but until we know your information, we really can't make recommendations for you. We appreciate you watching this video. We will put another video out next week, and we will look forward to that. Thank you.